According to CBRE's estimates, outstanding commercial real estate debt stands at $257 billion in the Asia Pacific. The funding gap, relatively modest, $8.4 billion. This is between 2024 and 2026, so it's a forecast. And that is way below the gap in Europe as well as the U.S. In other words, we're not likely to see as many distressed sales and also non-performing commercial property loans in this part of the world. Now, having said that, there's still a pecking order. Australia still has the biggest funding gap, followed by mainland China. CBRE says the risks will mostly center on office space and expects to see further repricing in that segment of the market this year. Let's bring in Henry Chin, APAC head of research at CBRE. He joins us now live. Henry, good to see you and appreciate your time. Why is the CRE situation so much, I was going to say healthier, but maybe that's not the right word. Why is it so much less bad here?
Well, if you look at the commercial real estate loans across the global, I have to say Asia got two fundamental differences. Number one, if we look at the loan to value ratio for Asia Pacific, largely remains stable. If you look at the U.S., the loan-to-value ratio was 72%, and now it's down to 57%, which is down by 15% for loan-to-value ratio. U.S. 65 to 55%. So when you see the LTV ratio was down, the interest rate increases. Of course, there's a funding gap in both regions. Number two, the bank a lot more healthier. We do the deeper analysis and look at the commercial real estate debt, the component. 70% of our commercial loans are recourse, which means that the commercial real estate loans is not only by the physical asset, but also by the sponsors. As a result, the funding gap in our region is a lot more mild compared to US and Europe.
So, Henry, let me ask you, with the world starting to cut interest rates, it's already started in Europe and also in England, the Fed, I don't know how long it's going to take, but they're going to get to it at some stage. We're waiting for the Fed meeting and decision later tonight, Asia time. How much pressure is that going to take off CRE1? And does it mean, as rates come down, that Asian CRE is going to recover quicker and faster, including office, which is the worst hurt right now?
Yeah, you have to say higher for longer interest rate environment is definitely challenging for commercial real estate spaces. And number one, investors are not in a rush to deploy money into the real estate spaces. Number two, for fundraising, it has been super challenging since 2023, even lingering around for 2024. I think people pay extra attention to talking about how many times of rate cuts from the U.S. I think it becomes irrelevant. What I want people to focusing on is when the Fed is going to cut the interest rate. Because when I was looking at the past 40 years, when the Fed decided to cut the interest rate for the coming 12 months, the magnitude could be quite substantial. If you look at the past 40 years, when that happens, the average rate cut up to 300 bips for the coming 12 months. As a result, I think that the timing of the cut is so important. We do need to have a cut. As of now, we do forecast 2 rate cuts in the U.S. starting from September.